Imagine a world where the US dollar is no longer the king. Right now, most global business is done in dollars, oil, loans, and reserves. This system has made the US powerful, letting it borrow cheaply and maintain global influence. But what if countries started to prefer other currencies? The demand for dollars would fall. For Americans, imports would get more expensive and the cost of living would rise. The US government would face higher borrowing costs, straining its budget. The special privilege of the dollar would be gone. For the world, this shift would create uncertainty. The global financial system is built on the dollar. If that foundation cracks, trade and finance could become unstable and more complicated. Imagine a Japanese company buying from Brazil today. They use dollars. In a new world, currency choices and risks multiply. Financial markets could become volatile as everyone adjusts. This isn't just theory, it's a real possibility. Throughout history, dominant currencies have always risen and fallen. Understanding this cycle is crucial to preparing for the future. We're seeing signs that the cycle is turning again. The world is changing and the dollar's position is being challenged. My goal isn't to scare you but to show you the patterns of history. By seeing these patterns, you can make better decisions for your financial well-being. The dollar's dominance isn't guaranteed forever. The world is preparing for change and so should you. The next chapters will show you how and why this shift is happening. Let's look at what history teaches us about the rise and fall of empires and their currencies. The story of the dollar is just the latest chapter in a much bigger book. Let's turn the page. History doesn't repeat, but it rhymes. To understand the dollar's future, look at the currencies that came before it, like the British pound. For over a century, the pound was the world's reserve currency, backed by the power of the British Empire. But after World War I, Britain was left with huge debts. The Great Depression weakened its economy further, while the US was rising as a new power. America became the world's top manufacturer and lender, while Britain owed money. This shift in power set the stage for change. After World War II, Britain was bankrupt and owed massive sums, especially to the US. In 1944 at Bretton Woods, the world chose the US dollar, backed by gold, as the new global anchor. The pound's reign ended and the dollar took over. The lesson: a currency's strength reflects its country's economic health, military power, and global trust. When a nation is overstretched and faces rising competitors, trust in its currency fades. This is a classic cycle. Today, the US faces similar pressures: high debt, new competitors, and internal conflict. The same ingredients that ended the pound's dominance are present now. History is calling, and we must pay attention. The fall of reserve currencies is never sudden. It's a process. The signs are here if we choose to see them. The next step is to look at what the numbers are telling us about the dollar's current position. Let's examine the data. We don't have to guess. The data shows the dollar's role is changing. In 2000, the dollar made up over 71% of global reserves. By early 2024, that number dropped to about 58%. Central banks are quietly diversifying, moving reserves into other currencies. This process, called de-dollarization, is a vote for less dependence on the dollar. The euro now holds about 20% of global reserves, with the yen and pound also playing roles. The Chinese renminbi is small but growing, as China pushes its use in global trade. The trend is clear. The world is moving from a dollar-dominated system to a multipolar one. The dollar will remain important, but it must share the stage. Countries want to reduce their risk and dependence on US decisions. The numbers are sending a message: the world is slowly hedging its bets. This shift is gradual but unmistakable. The next question is, what's driving this change? Let's look at the pressures facing the dollar. Three forces are putting pressure on the dollar: debt, money printing, and conflict. First, US national debt is over $34 trillion, more than the entire economy. When debt gets too big, governments are tempted to print money, which devalues the currency. The Federal Reserve has created trillions of new dollars in recent crises. More dollars mean less value. Basic economics. The world sees this and questions the dollar's long-term strength. Second, the US uses the dollar as a weapon, imposing sanctions and freezing assets. After Russia's invasion of Ukraine, its dollar reserves were frozen, sending a warning to others. This weaponization accelerates the search for alternatives. Countries like China and Russia want to avoid being vulnerable to US control. Third, these pressures combine to erode trust in the dollar system. When one player can change the rules, others look for a new game. The world is responding by seeking new ways to trade and save. The dollar's dominance is being challenged on multiple fronts. The next scene explores how US policies are fueling this shift. the cracks in the foundation are growing. Let's see how. U.S. policies directly impact global trust in the dollar. Persistent budget deficits mean the U.S. borrows more, selling treasury bonds. For years, these were seen as the safest assets, but rising debt makes buyers nervous. They worry the U.S. will pay back debt by devaluing the dollar. The Federal Reserve's money printing, especially during crises, has flooded the world with dollars and fueled inflation. For foreign investors, inflation erodes the real value of their dollar holdings. The use of financial sanctions, like freezing Russia's central bank assets, crossed a line. It showed that dollar reserves can be seized for political reasons. This has made countries question if their reserves are truly safe. Political polarization in the U.S. adds to the uncertainty. Debt ceiling battles and government dysfunction make the U.S. look less stable. A world reserve currency needs a predictable, responsible backer. When trust fades, so does the dollar's foundation. The world is watching and acting. Let's see how countries are preparing for a less dollar-centric future. Countries aren't just watching, they're acting. Central banks are diversifying reserves, buying more euros, yen, and renminbi. Gold purchases are surging, especially in China, Russia, and India, as a hedge against dollar risk. Nations are trading more in their own currencies. BRICS countries lead this shift. China and Russia now trade mostly in renminbi or rubles, and Saudi Arabia is open to selling oil in other currencies. Alternative payment systems like China's CIPs and Russia's SPFS are growing. These moves create a parallel financial system outside U.S. control. The world is preparing for change, quietly but decisively. The next question, how can you protect your own wealth? What should you do? Diversify. Don't just own different stocks. Spread your assets across countries, currencies, and asset classes. If the dollar declines, dollar-based assets lose purchasing power. Invest in international markets, commodities, and real assets like gold and real estate. Gold is a classic hedge against currency risk. Real estate and REITs can protect against inflation. Inflation-indexed bonds, like TIPS, help preserve purchasing power. Build a balanced, all-weather portfolio. Don't bet everything on one outcome. Prepare for a range of possibilities. History rewards those who diversify and adapt. The dollar's decline will be slow, not sudden. The dollar system is deeply embedded. No other currency can fully replace it yet. The U.S. still has major strengths: innovation, universities, and military power. The most likely future is a world with several major currencies, not just one, but slow change is still change. Long-term trends are powerful. Ignore them at your peril. Think of it like a slow leak. Fix it early, or face bigger problems later. Prepare now, while the transition is orderly. The world order is shifting. There will be challenges and opportunities. Those who understand history and adapt will thrive. Don't panic, be prudent. Take steps to protect your wealth as the world changes. We've seen the patterns, the data, and the forces shaping the future. The dollar's reign is in its late stages, driven by debt, money creation, and rising competitors. Other countries are preparing, diversifying reserves, buying gold, and building alternatives. The transition will be long, but the direction is clear. A world with several key currencies. For investors, resilience and diversification are essential. The best investment is understanding how the economic machine works. So ask yourself, how long will the dollar system last? Are you seeing the signs? What steps are you taking to prepare? The world is changing. Those who adapt will navigate it best.